All right, everyone. Let's jump into what's going on today in the market and just kind of an update. I don't do a lot of these. I listen to them and I study them. I just don't produce them very much. But for my partners, and I think I'm gonna send this out to really everybody because I'm hoping to have so much value in this. But we're going to talk about what's happening, what I think will happen in the future, and possibly what to do about it. Again, none of this is financial advice. I'm just a guy who's semi-retired and just enjoying life right now. I want others to come along with me. So, Silicon Valley Bank (SVB) just collapsed. It was the largest one of three to collapse, and so what happened is the government decided to bail it out. Right now, what they did is they bailed everyone out who had funds in there, right? Because the FDIC will insure you up to 250,000. But if you have $1 million in an account, well, that's 750,000 gone, right? And some businesses have to keep large amounts in accounts just for their business, so they don't have to transfer four accounts over, then send it to where they need it, right? So this senator from Oklahoma started to ask some really good questions, right? Because what the government has said is they said, hey, we're going to bail out the creditors to SVB, right? The people who had their money in their accounts. All of the investors, so if you had stock in SVB, if you were an original investor and put actual cash into SVB, etc., etc. If you're anybody else, you're SOL, right? However, if you are a creditor, if you had your money stashed away, currently the government is saying they will bail you out, right? So we're gonna see. Let's just jump in, and again, the volume's gonna be a little different. I'm having to use a different headset for
Let me
this,
start with some of the banking
he's
issues we're
got some
dealing with
really
on it.
good points.
Will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now? Are they fully recovered? Every bank, every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVB just got or Signature Bank just got?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is your
And we
plan?
made that determination.
Right. So what is
these
your
two banks.
plan to keep large depositors from moving their funds out of community banks into the big banks? We have seen the mergers of banks over the past decade. I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, we will make you whole at that point.
Look, I mean, that's certainly not something that we're encouraging.
That is happening right now.
That is happening because depositors are concerned about the bank failures that have happened and whether or not other banks could also
No, it's
fail.
happening
And
because you're
it's-
fully insured no matter what the amount is if you're in a big bank. You're not fully insured if you're in a community bank.
Well, you're not fully insured. And
You
the
were at Signature, and it just barely met that threshold. You were at Signature.
Well, we felt that there was a serious risk of contagion that could have brought down and triggered runs on many banks. And that's something, given that our judgment is that the banking system overall is safe and sound, depositors should have confidence in the system, and we took these actions.
So there's a
to
special
discourage
assessment that's been done
contagion.
on community banks in my state and all banks across the country. Was there any discussion that that special assessment would only apply to the larger banks, or was it always assumed the special assessment would cover every bank, including rural banks in my state?
I think, I'm not certain what the rules are around that. That's
Yeah. So what did she say? Basically, um, oops, what did she say? Basically, we'll bail a bank out only if we vote on it as a supermajority. Basically, if they want to, right? And they could say, oh, it poses a major risk. But what does this mean for small banks? The point that he brought up. Well, they are SOL, right? And what is happening right now in the market? Well, a lot of people are pulling. Actually, I think it was $1 billion in the last few weeks has been pulled out of small banks and into larger ones just because people are scared, right? This is what called bank runs. Um, so let's take a look at the last recession, right? Or the last thing that happened that made me think about this. This is the savings and loan crisis. Real quick, what happened in the savings and loan crisis? The recession in the 80s. Big picture, savings and loan crisis from 80 to 94. 1,300 of these smaller home loan focused banks failed. And they failed mostly because of at least one issue that still plagues us today: high inflation that prompted a rate increase by the Fed. Right, so it feels like history. If history does not repeat itself, it certainly rhymes, and it feels like we're going through that cycle again. Um, Here's some more information on the savings and loan crisis you can look up. But the long and short of it is right now SVB is getting bailed out. Right. Funny enough, I was actually on a date last night with a girl that works for SVB. Interesting talks, I know. But it's probably not going to get better. Right. In fact, everyone in there is looking for a new job. Um, and so what I think that we're going to come into is we're going to come into a period of stagflation. That's going to happen, right? Stagflation is defined as high persistent inflation combined with unemployment or stagnant wages, right? So in other words, you and others aren't making more money, right? Checks aren't going up, people's wages aren't going up. However, the cost of everything else is, right? So this makes you, in a sense, poor by default, okay? And so after stagflation comes a recession or hopefully not a depression. We'll see, but this is the debate where everybody's in right now. Are we going to go into inflation or we're going to go into deflation? Right? After what I said, people are like, well, it sounds like you're going to deflation, and there's some truth to that. Um, but also with the federal government giving SVB and the other banks, a few $1 trillion, that's more money into the system. They're just printing out of thin air. So that's going to cause some inflation in certain areas, right? Um, the inflation deflation thing, one way or the other, both are right. The issue is the timing. When is it going to happen, right? So we've seen inflation for the last few years. I think we're going to move into stagflation. I think we started to see it this year where wages aren't really going to go up very much, right? Companies can't afford to pay their employees more because they're not making as much because they're getting eaten up by inflation as well. And then after stagflation, again, stagflation can last for like 3 to 5, 10 years, right? Stagflation can go on for quite a long time until it breaks. And you look at these things, why is stagflation so bad? But it takes some time for it to go through. And then after that, there is a correction. There is a recession type thing. So here's some other good charts for stagflations. GDP is going down, which we're seeing now, right? I mean, that is the example of a recession, right? 2 negative quarters of GDP growth, right? We had that in 2022. They just wanted to redefine it, okay? We've had GDP go down. Unemployment has not gone up yet, right? So people are employed because right now they have to, because they need more money to buy stuff, okay? Also, the way that the government counts the numbers is they say, hey, if you drive for Uber and you drive for Lyft, well, hey, you've got 2 jobs. We'll count you as double employed. Kind of ridiculous, I know, but that's how they work the numbers. And it says demand goes down. So and then inflation flies up, right? These are recessionary things, but inflation is not recessionary. You can't have recession and inflation at the same time. When you push the two together in a smorgasbord, you get stagflation. So right now we're seeing GDP go down, we're seeing inflation go up. Unemployment demand has yet to fall. That is the next shoe to drop, in my opinion. Okay, and even the Federal Reserve, I've done this in previous videos, have shown or have said they want unemployment to go up because that is the way they think that they will affect demand, and then that will affect inflation because broke people can't buy stuff, right? And if people can't buy stuff, the prices go down. All right, so I'm thinking we're stepping into a huge series of stagflation. I would encourage you, maybe I can, if you're interested in me making a video, comment, like, subscribe, let me know about the savings and loan crisis because it's what we're walking into. It's very similar. I mean, even when I just read this out, 1,300 smaller banks failed and they went under, right? So as an investor, as a person who wants to build their wealth, the thing that we have to look at is if you need a loan, you better get it now, right? It is getting harder and harder and harder out there to get loans, both personal, commercial, everything. All right. So if you've got some funds, if you can find a loan from a bank, get it as soon as you can. Get it sooner than later. Okay. Next thing, I want to talk about this. We're not in the downturn yet. Okay, right? Again, I like this. I like this picture a lot because it gives a lot of different sides to it. So in a recession, again, asset prices go down and everything. We're not there yet. Okay, I think that's going to happen after a stagflation. So in other words, you have inflation go up, stagflation kind of levels things out, and then on the down curve, you have a recession. Um, I will put this quill in your cap. In a recession, assets can become liabilities. I'll say that again. In a recession, assets can become liabilities. What do you mean by that, James? So let's take a rental home, right? You've got, with mortgage taxes, everything is $1,500. Your rent's $2,200, so you're making $700 on the top. Ooh, everything's good, right? If you don't have renters in there, or if you can't find a renter, or if it just goes for a long time without one, or let's just say the guy squats or the people squat, and all of a sudden that has become a liability as opposed to an asset, right? It's not producing any money. In fact, you're having to take $1,500 out of your pocket every month just to keep it going. All right. I experienced this a little bit in 2020 when the government said, "Hey, renters, you don't have to pay rent unless if you scream COVID, or excuse me, COVID or whatever, so the algorithm doesn't get me." But that's the point to remember, right? In hard times, doesn't matter what it is, if you take anything away from this, take this away. There is no silver bullet for your financials. There is no silver bullet for your financial issues, right? Real estate's great. Amazon dropshipping is great. Oil is great. Insurance is great. You name it, whatever industry, banking, whatever industry you're in, they're all great when they're good. But money moves around, right? When things get high, they're gonna and overbought or oversaturated, it's gonna turn and it's gonna go down. That's just the rhythm of things, of how markets go. And so there is no silver bullet for people's financial needs, right? There's no silver bullet for your finances. You've got to move your money around. That's why I sold a lot of my houses in middle of 2021, early 2022, because I'll say I'm pretty sure that's the top of the market. And so, but assets can become liabilities in a downturn. Speaking of oil, I just wanted to put that quill in your cap, by the way. Let's take a look at crude oil prices. Horrible. This feels bad, right? It has dropped. It's all in the red. Even natural gas, everything is down. Crude oil is down right now because of recession fears, right? Because energy is the economy, and if the economy stops itself, which, by the way, a banking problem will, then oil is going to be impacted. This is going to be true type thing. So right now, people are thinking, hey, they're shorting oil because they think that it's going to go down, right? There's just kind of rumors in the wind. But let's take a look at a historical chart, right? And let's just go back to, actually, let's see if we can go back to the 80s and take a look at the 80s. All right, I can't get all of it. let's take a look at the last recession we can go through here, because 94 was when the savings alone stopped. Oil had, it had popped previously to that, and then it kind of dropped down and then popped again. You can take that for what it's worth type thing. The thing I want to draw your attention to is in the last recession, in the 2008 one, oil went high and then it dropped down to 59, right? It would say 60 or give or take, and then it just accelerated up. And the reason was because we found out that through certain things that, hey, we don't have enough oil, right? All of a sudden, oil, people were not making rumors about oil. All the rumors were found false, and we're like, shoot, we don't have enough. And all of a sudden, oil just spiked and it went up. And then eventually, again, the cause for high prices for anything or high prices. So oil flew up, came back down. Once it kind of ate itself, and then regained about 50% of what it lost, give or take, or to 50% of what it was in 4 to 6 months type thing, and then just kind of kept going up, and then we had presidential decisions, and the rest is history. But where we at right now, we had this huge spike here, and it went down. My estimation is it's going to go down and then shoot up, right? I've heard a lot of people in around the motor pool in the industry say, hey, oil could hit 65. I didn't really believe them at first because it was hovering at 70 for so long, but man, I was proven wrong. They were right, and so the same people are saying, hey, crude's going to make a comeback, and when it does, it's going to wallop everything. SPR, right? The SPR is down horribly. This is the stock one. Okay, this does not show the yeah, stocks. No, that's the right one. So and this one is just for December. Our president has decided to let go of quite a few thousand. I forget how many million barrels it was. I think it was 26 million to try to combat Russia and OPEC production cuts. Again, he's playing out of a savings account. They're playing with their weekly paychecks. The savings account will not win because we've only got so much in savings. And again, this was made for wartime use. Like if we go to war, we are SOL. And what's going to happen is we're going to need oil, we're going to start producing more, and the government's going to start buying it up, gobs left and right, hand over fist, and then the price is just going to go up in a hockey stick. Everyone I'm talking to in the energy industry is saying, hey, it's going to be tight for the next little while, especially because of the sanctions on Russia, right? They can't, their pipelines, their producers are not as good as ours. If you didn't know, America has the best and brightest, the most technological oil and gas producers in the world. Other countries import American companies to do the work, right, or to help them with the work of finding oil in their country and extracting it. And so with sanctions on Russia, like Shell had to pull out and everything like that, it's only a matter of time before they screwed up so bad, because if you're in a communist country, this happens, mismanagement's going to happen. They either have to cap them, and the permafrost destroys the casings to where they can't open them up again, or they just mismanage it so bad that it collapses on itself and the production is affected, right? And by the way, in the I think it was the 70s or 80s, the permafrost sites that Russia digs out oil, they froze in themselves because they had to cap them, and then they couldn't get them back online because the basically the oil and gas and the water and the jelly had frozen and broken all the pipes. So they had to import American companies to come over and help them fix this problem to get production back online. Well, with the issues with Russia now and the tensions between the U.S. and the Eurozone, that's not going to happen. U.S. companies are not going to be allowed to go over. So right now, crude is hurting. Not going to lie, it is. And I say hurting. It's been worse than 60. 66 is not too bad, right? 40 is bad. Oil and gas companies need about $48 to $50 a barrel to survive and go, right? 66 is not too bad. But if this is the low, if this is the dip here, right? And then we rock it up. That's what everyone in the industry is saying, and that's what we're expecting. So either way, what should we do with this, with what's going to happen, right? Again, I'm big on oil right now. That's where I've got a lot of my pennies. But my thoughts on this is, number one, if you can pull any money out, do it, like of a bank. And what I mean by pull out, if you can get a loan on something, do it now, because it's just going to get harder to be approved. Even if the Fed lowers rates, I will tell you this, if the Fed lowers rates, most likely that is because the economy needs it, and it will be harder to get a loan, not easier to get a loan. If you tried to buy a house in 2008 or 9, you know how this is. So my thoughts are, definitely, number one, squirrel away some money. Put it into a bank that you trust, that you've done your research on, that is not going to that's not going to just have to roll over and turn over type thing, or close its doors. You could do it in a big bank too. You could do it in treasury bonds. Right now, treasury bonds are giving like 4.5%, 5% last time I checked. I haven't checked this morning. So, and that is the only thing the U.S. government will say. Let us say that is safe. It is secure, right? And so squirrel away some money, because we don't know what's going to happen in the future. Everything's kind of edgy. I think we're heading to a period of stagflation, and in that, make sure your assets are paid off, or as much paid off as you can, right? Because you don't want them to turn to liabilities on the other side of stagflation, right? The other side of stagflation is typically recession, okay? Because eventually, these things, when unemployment gets high enough, demand gets low enough, it'll stop inflation, right? But right now we're at this teeter-totter where we've gone up in inflation, we're hitting a stagnation point in stagflation, and we're about to head downhill. And again, the stagflation could last 2 to 3, 4 years, or more. However, so squirreling away some money, making sure your assets are don't become liabilities, so the debt structure under them, make sure that they're not costing you as much. Do what you need to do with that. Or, and the other thing is, just if you've got a ton of money, you've got enough coming in to live off of, I just say sit tight, man. Stagflation is not fun. Just sit tight and wait for it to roll itself out. The reason I like mineral rights is because it has no liability. It is an asset that has no liability, right? You just have taxes at the end of the year like everything else. And then we've got multi-million-dollar tenants that technically owe us the first shares of, even before they pay themselves. So they can go under, they'd still owe us the money. That's what they agree to with the state. So it's a cash flowing asset that's got little to no it's got no liability to it. It does go up with inflation, right? If inflation hits really hard, oil is going to go up, because people are going to start moving and buying more things, and more things will be produced. It is recession resistant, because we still need oil in a recession, right? It's not a big screen TV. It's not, an electronic thing that, hey, we can hold on that later, honey. It's something that's going to last. So if this interests you, let me know. But either way, the biggest thing is I want to let you know is what's happening with SVB, the banks. Know that it is not over. It is just the beginning, right? Other banks will come down. We are facing the same zone crisis of the 20th century, 21st century, excuse me. And on the end of this, be prepared for the end of this, because there will be a lot of great buying opportunities, right? And lastly, no one's talking about this, because I don't think they want to hear it, type thing. So let me know your thoughts, and your thoughts on it, type thing. If you hate it, love it. If you don't agree with it, help me understand why. Put your 2 cents in. But this is what I am seeing in here. I want to let both my friends, my partners in the investments know, and